Good morning, traders. Welcome to the TMT Pro Trader Premier video for Wednesday, June 28th. Traders, we had a nice little move up, and then, of course, we had the market drop. Markets really are starting to break down. I mean, we have spoke about this many times. Are we on our fifth and final leg up in this bull market? We are. Is the projected target 25 to 25.50? Absolutely. I think that we're still within this range here. You could see that, but I do think that at any given moment things could change in a big and dramatic way. And I had mentioned many times, I've shown you the map, our S&P map of the 1929 crash. We're in that little pullback, and I think that once that pullback's over, I think we go up one more time to get all of the shorts in fully vested to the downside, and that's when that market's going to add a little more fuel to the fire, because they're going to have to buy and squeeze this market up higher. Now, that does not have to happen, guys. It does not have to happen. That's what I'm thinking. In the meantime, what do? Well, if the market rolls over, you short the market, and of course, you have to pick your spots, because what happens is when the market violently moves down to the downside, we had a big large engulfing candle breaking down from a 15-minute range, and then the market just kind of stabilized a little bit with another little pullback at the end of the day, but that was pretty much it. So if you weren't short, you really weren't short. You weren't going to get short, because you were going to get squeezed. That's how the market's been working of late. We get these little dramatic little moves higher with little volume, and then all of a sudden, bam, they sell off, and then all of a sudden they go back up again. Now, we're down a little bit in the pre-market, but what's interesting, and we're going to talk about it, is bonds and crude oil and gold. All right, that is really going to be where the big money's going to be made. Of course, equities as well, but I think that the big money's going to be made on those three different asset classes, as well as equities. I'll throw that in too as well. But the equity markets are extremely manipulated, not only by the Fed, but also by HFTs, algorithms, and dark pools. They're totally just throwing them around. It's like a big casino for them. They'll short rallies, and they'll cover at the lows, and you don't know what's going on with them. That's why a lot of assistance needs to be, especially when you're a new guy, because you have a very less chance of making money in this type of environment if you have very little experience. And I hate to say that, but it's so true. And that's why here at TMT we try to really get you on the right side of the trade, to really get you on the institutional side where and how money is made. But moving forward, we're down pretty big in bonds, and most of you guys on the video, we got long because of the gap fill area, and we did very well. You guys did very well on that TLT and the ZB trade. And I said tighten up your stops, because at any given moment you're into the second target. At any given moment, bonds are going to reverse, and reverse hard. Right? Mentioned that many times in the research videos. Well, bonds are down in a big way today. They're down over $1 in the ZB, 154.22, and I mentioned many times, rates are rising. They're here to stay. It doesn't matter. Once that fear trade is gone, bonds will sell off big time, and that's going to give us a cue to when to start looking to get short bonds. So for those of you who are not out of that ZB trade or the TLT long trade, I suggest any rallies today, get out of your trade, because bonds are going to look to get lower at the break below today and close below 155. Now, you really do have another day if you really want to wait it out. But the way bonds and a lot of the commodities sector, once they go lower, they don't stop. They just go down all day. There's no movement, because a lot of the producers, the commercial guys that need bonds for their business, or like I said, crude oil, and we'll talk about that in a minute, they just either sell one way or they buy. So just a word of caution. All right, let's get right to the charts. 25.50 here in the ES. We're still within the range. We still haven't done any technical damage, but if I was long, and I'm not, because I'm not looking to build any type of position here at the moment until this market fully corrects. You're right here. This is going. The line of sand is going to be 2,400. Okay. Now, 2405 is the lower end of the TMT proprietary price channel, but 2400, guys, that's the round lot number it needs to really take out. But you could see what happened here. We haven't done anything in the last, we're going on almost 3 weeks. That's going to put our Q, right? We talked about the gap fill. Remember, I said, watch, here's the 10-minute ES. Here's the gap fill. Watch, we're going to need to fill that gap. We did fill the gap. We tried higher, sold off miserably the last 2 days. Okay, now, again, if you weren't short, then you missed the short trade, which is okay. But watch this area here. 2412, 2417 is a big area of support. I would suspect that we probably roll back up to the 2420, 25 and see if we can get back above it. That's the spot here, 2425. We're going to need to get back above to go and start to move back higher. Now, is the equity markets in trouble? I think so. Yes, I do think so. I think that institutions are selling hard technology, and by selling technology stocks, okay, that's going to put a big damper on the semiconductors. You name it across the board. The SMHs, the XLKs, the ETFs for semis and technology. I think Apple's going to take it on the chin. I think Apple, you'll see a decline of anywhere from 15 to 20, maybe 30% in Apple when selling starts to go. It's going to go in a big way, guys. And I'm saying that because, like I mentioned to you before, doing this for a very long time. If you're long Apple, and probably the world is long Apple, once that crowded trade starts to unwind, you're not going to see Apple uptick for a very long time. Not saying that it's never going to go to the highs. I'm just saying I've seen it before. Okay, once that trade unwinds, it goes for many days and weeks. Nasdaq NQ, and we talked about this. What did we say? The Nasdaq is going to be a great short, and by what I mean Nasdaq, it could be the NQ, it could be the Qs, or a specialized individual stock. We talked about how MACD the histogram was improving, but we have not crossed over. We're making a lower low from this previous low. A lower high from this previous high, and this is just breaking down miserably. And I'm going to tell you, we'll see where this money flows into. And we have talked about it here about 3 weeks ago when we said, and all the pundits were talking about, oh, we got a sector rotation going. You don't call a sector rotation on one trading day, okay? So that's why shut the TV off and do not listen to anybody but yourself, and make sure you have your trading plan in place. They have no idea what they're talking about. There is no sector rotation, not on one day. Now, you can get a day that a sector pops, but you need follow-through. You need more money coming into that sector. And without proper money flow into a sector, and to identify, hey, you know what, I just realized let's just pick a semiconductor, or let's just say the staples, consumer staples, starting to uptick here for the last 4 or 5 days. Then you could say, hey, you know what, I think that the money's flowing into that sector, not one day. But now we're getting distribution days. Money definitely, I can tell you this much, is flowing out of technology. That's going to definitely hinder on S&P moving higher. You're going to have your up days. Maybe the 2500 to 2550 is a far call right now. But we will tell you when this market has topped, or we feel when this market tops, TMT will call it. Right now, it hasn't done so. It needs more evidence. Okay. Anyway, 5706, 5638, and then of course the big high here at that level. 10-minute, you can see here, 5670, 5705 is going to be a real small little area, but right up here, the lower end of the TMT price channel, 5719. That's going to be your area there. Crude oil, let's talk about crude for a second. You can see here, we did get a little bit of a pop. The API number that came out was a real bearish number. But I'm going to tell you why I think oil is going to rally. And we talked about this already. We had the API number, American Petroleum Institute came out with a they were looking for a negative draw. They were looking for a draw of 2.2 million barrels. So a draw of supply, right? They came out with a plus 856,000 barrels. That's a dramatic change, especially when now crude oil is coming into a sweet spot of the driving season for the summer. Crude oil right now is down about 14 cents. It was down much more than that. I believe, on my technical view on the COT report, commitment and trade reports, like we go over every Monday, that crude oil is going to rip. Why? Because the hedge funds are extremely short crude oil, and they're short always down here in the hole. They're long way up here at the highs, and that's what happens. Hedge funds are not smart money; they're dumb money, and you watch what they do now. If the hedge funds are buying crude oil here at the lows, and they start to buy as a trend is moving higher, that's when you want to look at, not at extremes. So at extreme levels, at this point in time in the COT report, the hedgies are extremely short and pressing their short bets, where the commercial traders have reduced their bets dramatically. That's why I'm telling you, you're going to see crude oil rip. It might not be today. It might not be tomorrow or Friday, because we're going to have an end of the quarter window dressing. So there's going to be a lot of individuals, smart money, accredited investors, are just going to get out of their oil trade, their bad oil trade. If it doesn't happen this week, rest assured, you're going to see a rip in crude oil. Now, where does the rip go to? We talked about this every day in our videos. We are going to see the lower low and lower high. I am projecting somewhere around 49 to 50 bucks. Once that happens, you're going to see mid-30s in crude oil. The fundamentals on crude oil is nothing good at all. We talked about this here. I've talked about it last year. I've talked about it. We went sideways. There's nothing good about crude oil. OPEC can talk all they want, talk their game about production cuts. They have no clout anymore. They have no clout like the 70s and 80s when they were the master producers, the OPEC members. And the non-producing nations need oil at $50. So they'll talk it up, and then oil will rally, but eventually will sell off. U.S. are the biggest producers. I believe, from when I looked at the numbers, we are producing the most ever in oil, and we are exporting the most that we've ever done before. So oil, fundamentally, there's no reason to ever see oil at $55. Now, you get a war premium, of course, that will happen. But if you look at the 10-minute chart, we are now breaking out of this downtrend channel. We have a little bit of a gap fill, which we're going to probably fill the gap today, because we're trading at 44.11, so we're actually trading higher than yesterday. That tells me, watch the crude oil stocks we talked about, the APA, SLB, EOG, some of the ETFs, even the OIH, the oil services stock ETF, the XLE, the energy, the XOP, oil and gas. Take a look at them, BHI, HAL. Look at the strong ones that did well on this pullback. Once that happens, they're going to rip the market, and I'm talking about in oil. Gold, we had mentioned the beginning of the week and last week. I think gold goes down one more time. We're going to get a big flush, and I do believe that's going to happen. Now, we had a big flush yesterday, and you could see here GDX didn't do too much. If it holds 21.33, this is something that I really like. It really ultimately has to hold 21.19. If it breaks 21.19, or let's just say round lot around 21, I'm going to be a little nervous about calling a second stage bull market in GDX, actually in gold, in the GDX, the miners itself. I do believe that we are in that stage, but we have to be careful. I still want to see that gap fill here. So 1207, 1200, really going to need to hold here. All right, but you can see the gap fill. We went into the gap. We didn't quite fill the gap. So I would suspect between now and mid-July, where gold concludes the weakness and we start looking at building strength in gold, and I think that's going to be a great time to start looking to acquire gold and start building a base in gold. All right, 10-minute, you can see here 1243, 1237. These are going to be your levels for today. 1237 all the way to 1240, 1243, 1250, 1258 to 57 to 1258. That's going to be a small area. Once we get through that 1258, we're going to rally all the way back up here. I don't think that's going to happen at this time, but just for your levels for today's trade. All right, bonds. I think bonds are going to really get clobbered. Bonds right now trading at 154.22. So we're right above here, the TMT proprietary price channel, right above it. So we need to hold this area here. If not, you're going to see bonds really start to sell off hard. Remember, when I said watch these little tiny candles, that's what scares me. So I said keep your stops tight, trail those stops. When you see those little tiny candles, you're going to see big, large engulfing red candles where you're going to wipe out 10, 12 trading days in 2 days. And sure enough, yields are rising across the board. Europe, they're really starting to explode higher, and that's where you're going to see the yield here start to move higher along with it. Right now, I think we closed at 2.19% on a 10-year. It's going to cost us a lot more money to do everything around here. Credit cards, mortgages, auto loans, you name it, it's going to be more money across the board. But I think rates have risen and are about to rise again, and they are here to stay. 154.40. These are your clusters: 153.62 to 154.11, 154.33, all the way up to 155. I said 155 here is a line in the sand. We need to hold that. Well, that just broke today. That's pretty much over. If today we don't get back above 155 on a closing basis, bonds are on its way down, and they are going lower, much lower. So just keep that in mind, guys, for today's trade. TLT, same thing, guys. Just watch that. That 200-day needs to hold at 125.12. Remember, if you're still long it, any rallies I'd be looking to get out of if you didn't do so already. Okay, great trade, though. Great trade for those of you who picked it up. We picked it up right around here. Great trade. All right, let's talk about the indexes. Indexes here broke down from this little base. We need to take back this candle today. If we do not, 50-day moving average is going to come into play here at 240. Let's call it 240.76. 10-minute, you see that base here at that we talked about, really important, 241.79. Next spot is 240.89, 240.32. Big cluster right here. Okay, we filled the gap here early in late May. So this spot here, I would reckon that we would start to look to pop a little bit. All right, 240.33. This area here, there's a big area now, which was support, is going to be resistance, 241.81 in spiders. Transports rolled over a little bit. We're still looking at the 167.75, 171.34. Russell 2000, guys. I mean, it's given us some really nasty signals, man. I'm telling you, can't get out of its own way. I mean, just cannot get out of its own way. Now that's what happens. You'll see when it goes lower and rips up. We go sideways, we rip up. Go sideways, rip up. Go sideways. So making that higher, 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 low. But it's just really just chomping everybody. If you are not trading IWM, or you don't need to trade IWM, the Russell 2000 ETF or the TF, stay out of its own way. It is just the worst trader that I've ever encountered in many years doing this. But we're breaking down here from this uptrend line. 138.30, 138.85, 138.98 your support. 140.146 to 140.180 is still your resistance. Here's the 10-minute. We broke down from here. Let me just show you. We have this little uptrend line. This is off the daily, same thing. We broke down 140.41, 138.72, 138.24. These are your two support and your little area of resistance, and then of course the upper and lower of the TMT proprietary price channel. Last is going to be your Qs. You can see we're starting to break down here as well, just like the NQ, 137.26, 135.80, and then again your resistance area. But this is definitely technically breaking down. Look at the distribution candle. Remember what I mentioned? We rallied all the way up from here, right up from this day, and we had no volume, diminishing every day. And I said, guys, watch, be careful. It's going to be a great trade. Any rallies in the Qs or the NQ, any good rallies, I would be looking to short the Qs. 10-minute, you can see here, 61.8% retracement. I said, watch that. We broke back up. And once we broke back down below the TMT proprietary price channels, it was over, guys. Okay, so these are your levels for today's trade. Right? Coming into the July 4th weekend, things are going to get a little bit whippy. Volume's going to be extremely light starting after today, Thursday, Friday, and into next week. Next week is going to be very light trading, but it's going to be some great volatility. Volatility creates opportunity. Remember that. Have a nice day, guys. Take care.